Ever wondered how leverage trading works? In this video, I'll explain just that and also how you can use the Bitshares blockchain network to leverage trade for free. This is a video animation for a bounty claim for the post by Bill Butler. Thanks Bill for rewarding me the bounty, and I want to make this video so as to make this content more accessible to more people. So, to understand leverage trading, let's use the analogy of borrowing equity from your house. Imagine you have a house worth about $100,000. You've taken out a loan to pay for it because you have a stable job, but did not have the lump sum to pay it off outright. You've currently paid 50% or $50,000 worth of that loan, and you have that much in equity in the form of a house as your asset. Now comes an unexpected medical procedure that you need in order to save your life if you do it within the week. The procedure costs $15,000, but again, you have no cash, so you have to decide between dying or selling your house to pay for the costs. The problem with selling the house is that you can't sell it in time, so you take a refinance on your mortgage to get the $15,000 out and put your house as the collateral. Since your house is worth $50,000 in equity under your name, you've put up about 3 times the value of your loan, which is required by the bank. Then the 2008 real estate crash happens overnight, and your house is now worth $70,000, and thus your equity is only $35,000. This is $10,000 short of your required 3 times loan value of $45,000. Your house is now repossessed and sold cheaply for max fee to repay your debt. This analogy is pretty much what happened the last few days in the leverage trading of BTS. I will now explain the terms and tie it to our analogy. 1. Settlement price is the average price of BTS traded on all exchanges. You can think of this as Zillow's price listing of homes. 2. Call limit is the least collateralized loan, one that has the least amount of support or backing. You can think of this as the loan that is the first in the line to be defaulted and thus having the house to be repossessed. 3. Margin call price is the price that your collateral will be forced to be sold at. You can think of this as the price your home was auctioned off to the highest bidder. 4. The purpose of the yellow shaded area is to show the volume or height of the orders that are forced to be sold right now. You can think of these as the countless for sale posts on lawns with the stamp of foreclosed houses. 5. These are the initiated from those who loan out assets and want their money back. You can think of these as the bank that is also insolvent and are asking to terminate the loan early. 6. Strategies you might want to employ in this market scenario is to buy up margin calls or initiate forced settlements if you can. You can think of this as Warren Buffett coming to buy up all the houses for pennies on the dollar and then either waiting or renovating it for a profitable flip later. I hope you learned something from this post, and it was as much fun for you to watch as it was for me to make up those analogies. See you around.